Hey everybody, Goldman telling everybody to run for the hills. This is interesting right here. Interesting. Check this out right here. Look right there. Goldman runs for cover, tells clients to buy VIX calls now. Check this out right here. Right there. Portfolio Hedging Toolkit, March 2024. This is from the Derivatives Research Desk at Goldman Sachs. Right there. Well, VIX is pretty epically low. Let's face it. We can look at it here in a few minutes, but pretty epically low. And we usually see, seasonality wise, we usually see a large spike in VIX in March, heading into April, possibly. This is a reasonable play. So, Marshall clarifies that bank's volatility model, which is based on 5 economic factors, suggests that VIX will average 21.5 in April. That's the average price for all of April, based on economist forecast compared to 13.8 as of right now today. So think about it. If we're averaging 21.5, that means possibly going higher than that and having some time lower than that, and the average comes out to 21.5. This is an interesting chart right here. Interesting article, interesting analysis. So, historically, we're talking about from 1990 to 2023. VIX has averaged 19 in April, and we're sitting about 13 today. So I felt like this was important since Goldman, arguably, they do give investment advice, because that's the business that they're in. I don't give investment advice, but they're recommending to clients to hedge their portfolio right there. All right. Any questions, you can let me know in the chat. I just wanted to throw that out there. I thought it was important. Like, I haven't seen something like this hitting for a while. And it's definitely interesting, especially yesterday as we saw 2 out of the 3 indexes kind of showing some weakness. And we've got some interesting stuff coming to the markets. So we'll talk about that, the markets, more in a second. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, and entertaining. It is not a recommendation to buy or sell anything at all. Don't buy stuff from gurus like me. Don't buy stuff from other gurus unless you trust them. Make sure you trust me before you buy anything. Don't buy stocks, don't buy options, don't buy Forex, don't buy futures, don't buy cryptos, don't buy bonds, don't buy treasuries. Don't long them, don't short them, don't trade them. It all involves a substantial risk of loss. Yes, even the treasuries, substantial risk of loss as U.S. debt climbs to ridiculous levels, adding $1 trillion of debt every 100 days. February, we saw U.S. spending exceeding the tax receipts by more than 2x. It's not sustainable. Those treasuries could be worth less than the digital bits they're printed on. Now, if you desire personal financial advice, you got to hire somebody you trust and consult that financial advisor like Goldman Sachs or whoever that might be for you. But you got to make sure you trust them too, because let's face it, most people out there just trying to make some of your money into some of their money don't really care about how you do, or even though these financial advisors are legally bound to take your financial best interest into heart. They didn't used to even have that rule. That we had to pass a rule in the U.S. that financial advisors would take your financial situation into account and try to better it with the advice they give you. They used to not even do that. It blows my mind. And anyway, so this week is wrapping up here. The jobs report kind of coming in a little sketchy. I have to admit, like 99% of the job losses this week were in New York, New York State. That was just kind of messed with my mind. We see Empire State Manufacturing Index coming in light. Who might have said that? Thought we were going to see that come in light. We've got the consumer sentiment coming out later on here after 10, about 40, 39 minutes. We'll see if that comes in. I'm guessing that's got to come in light. I mean, it could come in, could pop. I mean, looks like we made a trough down here. Just not, I don't know. I think we're going to do another one of these dips, probably. You see how we kind of do these couple highs and then dip, couple highs and then dip, couple highs and then dip. It's a pattern, you know. I can't help but see it. And that's potentially a lower high if we dip on down again. Potentially, I mean, was this a recession? I mean, look, back here, all the way. That was a great financial crisis. Consumer sentiment was higher then than we had right back here. I mean, now we're pulling back out of it, but I don't know. You tell me. Let me know in the chat. I appreciate other opinions on it. And speaking of the chat, if you want to chat with me, click the link over here where the monster can is. Be a subscriber on the channel. You can chat just like Infinity, Valerie, Larry, Goose, Sergio, John, Everett, Mark, Rex, Gary, Craig, Eric, Leah, JB, Darren, Don, Dan, Andrew, George, Tim, General Rush. Good to see you, sir. And all the other fine people in the chat. Kevin made it live. Sledge, my lovely wife, Kimberly, Wrongamer, Infinity, of course. And we're just seeing a ton of people. Ray, Al, Pat. Good to have everybody with us today. So anyway, back to it. And hey, Chris, glad to see you. Still world traveling? You home for a little bit? And dun, 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 dun. Good morning, Jody. Good morning, Shane. Shane back with us. Man, I haven't seen you in a coon's age. As they say down here in the South. Anyway, all right. S&P. A little bit rocky yesterday, but holding support. Look at this. Now, is this a wave one down, a retrace really deep, and we get a marginal lower low, or back home for again, then you're going for a week? Well, enjoy your time at home, I guess. Chris. Now, this is interesting, though, because some friends of mine think if we break below this low, around 50.90, that it's going to trigger a bigger cascade down. Not sure. This could be a big corrective move. Hold here and bounce. And so we could get a flush here. This is unclear price action, is what I would say. Unclear. This could be a 1-2, and this could be the third wave down, or we could hold that support here and blast off higher. Now that we crossed this 618 level on this bounce, this corrective bounce right here, that was 3 waves down, bounced up, crossed that 618 level. That kind of tilts the odds 70-ish, maybe 80% likely that we're going to see this pop right up here to 2116 on the S&P. Now, I don't usually use the S&P numbers because they create gaps. So usually I look at the futures, and the futures action overnight looking kind of sloppy. Let's be honest. I mean, look, that looks kind of sloppy. And we're already coming down, potentially going to extend that down. And kind of like I was saying, this could be a move up. We failed to break out higher. 1, 2. We could push down to a nominal lower low. We will be looking for support to hold right in here, or possibly down to the 1272 on that side. Now, I am using the 2-point tool and the 3-point tool to do this. And if that's confusing you, I have a fib class that I teach. It's jeffreytrader.com/forecast, but this is more high-level technical analysis, and there's no reason you necessarily understand it right now. That's why you come and watch me, right? Watch me do it. You can join me if you want to. Links in the description down below. Market Roadmap is the easiest technical analysis I can teach you. And so on the futures there, though, not holding the roadmap line. Now, this is a divergence between the S&P here, the cash index, and the futures. Interesting divergence. So this could take us lower, potentially. Is that a market roadmap bounce right there? You'd use the 2-point tool. Roadmap bounce from below. If we break below that 5202 area, potentially setting us up for 5178, 5164, on the downside. Be like, doo, 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 right down in there. 70% likely level right there, 51.78. Then we'll likely see a bounce, and then we'll see what happens. But if we get down that far, we might as well make the lower low. Might as well, right? Might as well. So watch out for that. And if we hold that and bounce, that could take us right up to higher levels here. And it would pull that, you know, if we made a little bit lower low, it marginally pull that level slightly higher on the futures. So something to keep track of here. Something to keep track of. Yeah, it looks like we're pushing down into the open here. These are delayed by 10 minutes, so I don't actually have live price action on the futures. Now, NASDAQ, though, look at this. There's nothing bullish here at all. As I said yesterday, we were probably going to go down and test the bottom of the channel, and that's what it looks like we are on the path to do in the futures here. Now, if we can hold this, we'll probably, you know, where does this channel come from? Well, let's zoom back out and zoom her out and check it out. You can see this channel we've kind of been hovering in all of this year so far. It's a pretty aggressive channel, actually. Pretty darn aggressive. I can't even make it look halfway decent on the chart here, is how aggressive it is. So we've been chugging right in here. We're coming down near the bottom. Every time we've kind of hit the bottom so far this year, you know, sometimes even getting close, we've shot up back to the top. Shot up back to the top. And this one actually missed slightly, actually touching the top. Didn't quite touch the top. Could come back down, test the bottom. If we hold it, probably going to cruise right back on up here into April. Or late March anyway. Now, the other thing that I've been talking about. Check this out. Check this out. Check this out. Another thing to talk about. The fact that the rally from here, March 23, rewind a year ago, crank it back, rewind a year ago. March in 2023, we made a bottom, and then we went on this crazy epic rally. Reminds me a lot of what we've just done. No pullbacks in the market whatsoever. I mean, we get a couple red days, but we just went higher right into July last year. Great times, right? And then from July into late October, it was a bloodbath. I mean, everybody thought we were setting up for a giant market crash, correction, whatever you want to call it. You know, it's going to go down the toilet, right? I mean, headlines were all over it. And right there, it lasted about 140 days, 96 trading days, 96 bars. Now, from that October low till now, dun, 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 look where we are. Right at the end of it. Right at the end of it. Looks like Monday could be the end. And if you give credence to the market kind of rhyming, repeating, echoing, if you will, I have a product called Echo Trades based on that concept in the market. Sometimes we see similar reactions. This one, you know, typically I'm looking for price echoes. This one is a time-based, potentially a time-based echo. And there's the market opening, getting a little pullback this morning, down 27. I'm just throwing it out there. The possibility, all right? We could come down, do a roadmap line test. We did it actually on a 3-day back here. If we jump up to the 3-day chart, so it's actually a 3-day market roadmap test. If we did another 3-day market roadmap test, we'd be talking about 4,500 again. Ah, God, that would be way the fork down there, right? Whew. That kind of aligns, though. It aligns with this. It aligns with that. So I'm just throwing her out there, all right? Throwing her out there. Possibilities. Possibilities. Now, all right, now now that we're into the bad news, let's get some more bad news. Russell actually looks pretty freaking dangerous too. Although holding up overnight, not really getting the continuation lower overnight. We're just kind of holding steady here. Interestingly enough, didn't really do anything. Almost nothing overnight. We rallied into the close and did nothing. It's unusual for Russell. But we had a pretty much a bloodbath in Russell yesterday. So taking it easy into the open. We'll see what happens. We'll see what transcends here this morning. We may get a retrace. There's usually after a giant down, we get a taking it easy or a small retrace. But we could get continuation if we break out of the channel on Russell. And Russell did touch the top of its channel. And we'll zoom her back up here. So we've kind of been in the same kind of channel. This one started later in January. Not like NASDAQ that started in December. We kind of been ping-ponging up in here. We've been hanging near the top for a good long while. So we may drop down, test the bottom. Haven't really tested it since back in mid-February. And that would put us down around 2025. And you may be like, what the heck is Russell? That's IWM. IWM. That's the ticker for that. You can see it right there. We're actually getting close to the bottom of those, the uptrend of those lows on the IWM. That's the ETF. Golly, excuse me. That monster talking back to me today. That's the it's the grapefruit one. It's pretty tasty. I like it. It's like a sweet grapefruit. Oil pull, like we're getting a lot of red today. Oil. That signaled the breakout. I mean, I was super excited yesterday into the close. That's the breakout. Probably going. There's like the odds are super high right now. Like almost 90% that we're at least going to rally up into this 83.50 area right here. If it lets me down now, it's that's just stupid. I mean, it's still a chance it fails. Still a chance, but it's like highly likely we're going to go tag that 83.50 area on oil. You may be like, how the devil I even take advantage of oil? Well, you could trade something like UCO, USO. There's a bajillion oil funds. I mean, there's a ton of them. And you just got to pick your weapon. My weapon of choice is UCO. It's a leveraged oil. Ultra. Be careful. Leverage is dangerous. All right? Be careful on leverage. Leverage cuts both ways. If it fails, it can get you really quickly. Gold hovering. Yesterday I was thinking that maybe we needed to see this touch, actually fully touch, and we didn't quite do it yesterday. We got down in the vicinity and then bounced back up a little bit into the close, pushing down a little bit overnight. I just want to wrap this baby up and get out of here. This holding above that breakout is actually very bullish. I just don't know how long it's going to have to consolidate before it actually goes on up here to 21.14. It's likely to do it, but how long is it going to take? That's always the hardest part of all this, predicting the time. If I can get the time exactly right all the time, this game would be easy. I mean, I get lucky on the price all the time. If I could just figure out the time, we have no problems. I'd be a freaking genius, right? But time is the hardest part. I promise it's the hardest part. Some people don't think that, but I'm telling you, for me, it's the hardest part. So we came down, made that initial low, just like I was showing on S&P and NASDAQ. We kind of made this initial low. We retraced, held that 618, kind of sets us up for this further push down. And we may actually push below that support just a little bit down into this 2139 area right here before we can find the bounce and go. The bounce could be wicked fast. Like we could go up really, really quickly once this correction here completes. Now, if we start breaking down below 21, we say 2120, and probably 2125 probably. If we start getting below that, we could take a bigger correction. We could be in for something on down to 2100. Maybe even down to 2075. Retest that support resistance flip point zone. Yeah. I want to see this wrap up though. One more little flush. Anything lower than we made, anything lower than these two prior lows can wrap this baby up pretty quickly. Make a little flush out. An interesting analysis I was reading on Medium is that we've all been trained to put our stops below the lows. Right? You go long here and you put your stop down here. And then they came and hunted that stop, but it didn't flush. So now we've got two lows right there. That's extra firm support, right? So now you went long again and you put your stop down here. So this thing may hunt those stops, flush this out before it goes higher. I mean, it's an interesting analysis based on stop hunting. Bitcoin futures turned a little nasty here. This looks like we could be finding a low. Looks like a very classic three-wave type move. Off that high, 1, 2, 3, right down into the 1272. That might be it. We may see Bitcoin rally back today. Now, it could be the first move of a deeper correction. Wouldn't be unreasonable. I mean, this correction we had right over here last week, very quick, very deep. Gave people a lot of motion sickness, and then we shot right up to the 1272 and parked there. Tried to break through, retrace, tried to break through, retrace, tried to break through, retrace, gave up. Needed a deeper retrace. So, in Echo Theory, moving the wrong thing. Just delete that one. If, in fact, we echoed, we could go a little deeper. Could see that flush on down to about that level. Down there around 64,000 before we found support and bounced. But could bounce from here. Entirely possible. If we hold right here, bounce and go. I know a lot of people are super interested in Bitcoin right now. Look at that. Right up into the target zone, the 1272 extension. So where's the activation point? Right there at that, right at the roadmap line, 71,000. We break back above that. 70% likely we're going to 76,800. Right there. Like that. How can you take advantage of that? Something like BitX. Reasonable way. That's a leveraged ETF on Bitcoin. You can leverage your, just buy shares and leverage your play. Now, leverage does cut both ways. I do caution against leverage. This can bite you. If we get a further pullback, it can come all the way back down here very quickly. Very, very, very quickly. And BitX was on the biggest losers list. All right, moving on. Ethereum. I don't usually cover copper daily. It's pretty bearish. And Tuesday evening, the 30 Minutes of Awesome show I did on Tuesdays where I cover copper. That one went deeper. Kind of tested the downtrend or the uptrend of the whatever. I'll have to zoom out to the daily so we can look at it. Oh, yeah, the uptrend of the highs. We broke through that uptrend of the highs. Came back to retest it. If we hold here and bounce and go, it's probably really bullish. If we break back below it, probably coming back to the roadmap line. It's that simple. That simple. I was thinking it was this line, but no, it's the up trend of the highs. God, I can't move that thing. So we may come back and test. If we get below it, we may come back and test. Wow, can't even grab that. There we go. That was kind of the breakout zone too. Maybe like, JT, I can't see. So we broke out of that high and shot all the way up here. Come back for the retest on that uptrend of the highs. We break below it. This confluence zone right in here. This may be where we come test, right in there. If we break back below 3,500. And funny enough, that's also the 618 level that we broke through, which set up about 70% likely we're going on higher. Higher, probably 7,500. It's tipped the odds. We're like 70% likely we're going on up. Dollar index? Something's up with my trading views being weird. Rallied back up in there last night or yesterday afternoon. Dollar rallied back up into the middle of the consolidation. That is not what I wanted to see whatsoever. That was not cool, dollar. Not cool. Probably going to see that retest the roadmap line once again. If we break on through and get above all this, we're going up. That up, still up here around 109. If we reject it, break down below this, going on down that low, down around 99. Nice big fat $10 zone. And we're sitting not exactly in the middle, but a little bit tilted to the upside. But the price action has been bearish, so I give favor to going on down. MDGL. Pharmaceutical. Not my favorite. Netflix was popping. Now it's dropping. It is up for the day, but it's turning sour. I do think it needs a retrace before we can get another major big up. It'd be nice if we did it before the next earnings coming up next month in April. Kind of aligns. All these things keep aligning here. Needing pullbacks. That needs a pullback. Could go on an extension. 46.50 on the upside. CDLX. Cardalytics. Never even heard of this company. I don't believe. I mean, obviously I've drawn a thing on here before. Potential measured bounce. And actually that looks like it might be what's playing out here. 42 would be the upside, minimum upside target, 42 to 70. That's a pretty good little potential there, going from 13 to 42, possibly 70. I need to put that on a list. This is an interesting chart. I got to do more analysis on this chart. This is very interesting to me. There's the level to break above. I'm going to put an alert right there. You get above that 15 area. See where he hit support very hard right there? Or hit resistance, I mean, and then turned down. And that line wasn't even there until we made this low. Funny enough. We break back through it. Really sets it up. Conservative exits would be like 22, 27, but the more aggressive play, and we've seen this play out quite a bit in the market. Up here, 42 to 70. Maybe even as high as like 150. That would take it back to a new, back to the prior highs. Get that. That's interesting. Very, very interesting here. 145. Yeah, 145, not 150. All right. BKTX. I may make a position in CDLX. I'm going to have to go look at that one after I get done here. I'm going to have to spend some more time with it. BKTX is a biotech pharma. Be careful in that. Medtech, pharma, anything the FDA is involved in, we get these crazy pops that don't necessarily agree with the patterns. And it just makes it extremely difficult to try to predict these things. That did break out and it shot all the way up to the 686, almost. I mean, that almost worthy calling it a touch. And It's like 1% of moves do that. Or less than 1%. Was off of the big move, that was a 4-2-3-6 and stopped dead cold. It may refill that gap. Drop back down. VLO. Valero. Keeps on rocking. 169 above where we are now. That was the target right there. And that was from this 162 pullback. This pullback we did all the way back here in early last year. Finally got to the first target. Took darn near forever. That's why I say time is the most difficult part of this thing. Sometimes buying shares gives you plenty of time. 177, next target up on that big pullback. And the 169 may prove to be resistance. We may retrace and then work our way up there. So it could be well out into the summer if we get a pullback. It takes a little bit. But if oil keeps rocking it, since they're a big refiner, we may just shoot the heck off. Just keep popping. PDD, look at this classic market roadmap bounce so far. Very aggressive entry here. More conservative would be an entry above here. Looking for 164, 178 up there. MU kind of topped out in this resistance zone. Are we going to get a bigger pullback? This was high as once, high as twice. If, in fact, we break out of there, probably going on up. 120, 150, possibly much higher levels, 245, 300. This one could be the next big popper if it can break out. If. That's a big if. And it's got the odds that we're going at least up to this 120 area. Like 70% likely. But how much does it pull back first? I don't know. ZEO. Nothing I can do with that chart. If that was an IPO, it's probably going lower. SCCO, Southern Copper. Look at that, baby. That is rocking higher. A nice chart. Finally breaking out. It had a long resistance build up here. Golly. Worked it through, retrace. Worked it through, retrace. And that's kind of what I was warning about on MU. Could see another retrace off of that potential breakout before it really starts going. Now, how high? How high could she go at this point? We got beautiful three-wave. This is a very high time frame setup here. We're already through the 94, already through the 108. I'm on the log scale even. And 108 right up there. 35 above that. 150 above that. Looks pretty nice. Looks pretty nice. Contrast that to FCX, and that looks like a piece of garbage. Absolute piece of garbage chart. So SCCO is definitely a better way to play copper at the moment than that piece of junk. GERN. Nice pop. Move this up to the high. Move this down to the low. That's biotech for you. If it's going to go, $4, $5, and it's under $10, so that makes it even sketchier. I mean, not sure I'd bet on it going. It does have significant resistance right there. It's a nice pattern, but it's biotech. Be careful. ADBE, well, I thought we needed a bigger retrace. We're almost to the target. That. Will, the intern, is on spring break this week. He was convinced, based on the pattern, we were probably going higher. There it is. I told him it was uncertain, and I thought maybe I gave higher odds to going lower. And there we go. Probably going on down. MSTR, the warning. We're due. We're likely, after that monster run, to get some sort of wicked, vicious pullback. Careful out there. Right now, it's not even that vicious. I mean, 3%, barely a blip on this chart. Just be careful. I mean, look how high it went. How high, how fast. It's dangerous stuff. Ulta, almost retracing the roadmap line in one go. Right to touch the target and retrace. Love it, man. That was a long-term target from way back here. It was from this craziness. If I recall correctly. Have to get my fib lines right. Yeah. Something's not right on my fib lines at the moment. So I got the ADJs turned off. Yeah. One of those moves, I put that that target up there. We just tagged it, retraced, roadmap line, but next upside targets on up there: 605, 669, 790, 854. I mean, lots of upside potential after we retrace this and get going again. HIBB, right to the roadmap line. Perfect. Love it. Love it, love it, love it. I'd love it to go just a little bit deeper, but actually fully test it right back above this 77 area. Probably going to 88, 95 on the upside. Coin rejecting off that 270 target. Be careful. Look right here. See that retrace there? See how it was about the same size there? See right there? That's echo trade theory right there. We could see a retrace back to this level. That roadmap line could activate. Wonder Twins activate. Anyway, could see this climb right on up here and this decline right over here. And the halving event for Bitcoin. Talked about that ad nauseum, potentially coming up right around there. So this could go quicker. Maybe we get the flush now into the Bitcoin halving. I mean, maybe that's what we see at this point. 35 days left. Just over a month and yeah. 31 days in March, so yeah, just a month and 4 days. That would put us right on the 19th of April. 5,100 blocks left to go. Get a little pullback. We could see a pullback into that. So, yeah, look at that. 20 minutes. Up the difficulty. Now we're running behind. Yeah, I talked about this earlier in the week that they would change the difficulty and it was probably going to go up. Previously, and we upped the difficulty a bit, and now we're running behind on blocks. So it's actually taking a little longer. It's taking 10.5 minutes on average right now to mine the blocks. So they slowed down the mining. Look at that. People paying nice chunks of money, paying well above the average to get their transaction included in the next block. So wow, look at all those transactions stacked up. 29, 24, 24. It's been 20 minutes since we made a block too, so that's why this is stacking up. It was 20 minutes between those blocks. It's still got 114,000 transactions hanging out here, not willing to pay much to get included. I was explaining this to my daughter, not last night, but the night before, that you have to pay money. You have to pay some of your Bitcoin to get your transaction approved and included in the block. If you're a cheapskate, you sit out here in no man land indefinitely, waiting and waiting and waiting. If you don't increase the amount you're willing to pay to get your transaction verified in the Bitcoin blockchain, the chain of blocks, then if you're a cheapskate, you don't get it included, and you just wait. If you pay up, you're willing to pay some more. High priority. That's the orange ones. The red ones are super high priority. They're paying big money. You see the going rate's 31 satoshis per virtual bit, or virtual byte, excuse me. These down here, willing to pay 446 satoshis per virtual byte. That's a nice chunk of fee. So those transactions are, if you pay higher than the going rate, you're almost guaranteed to get included in the next block. Otherwise, you got to wait until you fall in the middle of the run here. All right. That was a diversion. But coin, it's based on the crypto market. We may see a crypto market pullback into the halving. Entirely possible. I thought we might. I've been saying it for months and months. You can go back and watch. I thought we may get some kind of crazy squeeze, FOMO. That may have been, we may have played out the end of FOMO. Could have. We started early. We could play, it could have ended early. I think we still got 30 days worth of FOMO left to go, potentially, but could get some crazy volatility in here, especially in the Bitcoin chart. Go to the Bitcoin all-time history. I'm just talking about potentials here. If you don't cover all the potentials, where can you be wrong? That's when you're set up for getting surprised. I try to not be surprised ever by something the market does. I sit here at Red Team, different scenarios all day long. How am I wrong? What am I not seeing? Where is this plan going to go awry? That's why I throw out these scenarios for you. So this looks like we're just going to get continuation higher. The way FOMO works, we may FOMO to higher levels right into the face of Bitcoin. Halving coming up on April 19th. Highly likely, though, that we see some sort of wild pullback. All right. And if you have no idea what I'm even saying, why I'm saying that, if you're new here, look, here was the last one. Look at that. See what we did? That was roughly, this was the previous halving event. That was roughly 58 days ahead. Yeah, see, we're in 35 days now, so we're inside this window. We didn't do one of these, not to that size and scope. Now, if you look at this, the low to the high, it went deeper into 786 retrace. Now, the time before that, we rallied right up into it, got a sharp pullback right into it. Look at that. That one. That pullback only about 11 days ahead of the halving. But then it carried on through, and we actually got the low over here. Roughly 29 days after the halving. I don't necessarily have these perfectly placed. So we did get a pullback after the halving, and that's kind of expecting something like that this time. Now, time before that, like, how many halving events have there been? There's been 3 before. This will be the 4th one. We saw some volatility coming into the halving. In the halving, no real pullback after. We did get one right here. This one, roughly 39 days ahead. Like I said, I don't have them perfectly placed. So, and then the time before that was the OG block, and we didn't have any prior history because that was the creation of Bitcoin all the way back there in 2009. So this thing is 15 years old now. History of the halvings show we'll probably experience some sort of wicked pullback. Probably. All right, could be 78% of the rally that we've had off the lows. Maybe like, what does that mean? Go from down here at 15 up here to the top. 78.6 puts us back down here. Right back down in this zone. You may be like, oh my gosh, that made me puke. Well, be careful. All right. That is entirely possible. Even down here is entirely possible. I don't think we're going to see 25 or lower again, but it's entirely possible. Everything's possible. All right. You ask me what's possible, it's limitless. There's infinite possibilities on what happens. I'm just giving you the most likely scenario as we see some more FOMO and then we get a pullback. As we develop it and get the actual permutations of price, I'll be able to tell you closer. And right now, looking at the micro time frames, it looks like we may be, as I went through on the futures, we may be wrapping this baby up and we may be pushing higher again. Those next upside targets, sitting right up here, like 76,000. It's the next immediate upside target based on 1, 2, 3, a big 1, 2, 3 retrace right in that low. Once we get above about 70, 71,000, probably coming up here to 76 again. JBL getting slammed. Look at that, up right up to the 1618 and back to the roadmap line. Beautiful. Beautiful. If we can hold support here, next upside 164, 174. NXPI probably coming back down to the roadmap line for support right there. SMAR did something more bearish. Different pattern playing out. Just move down, retrace almost to, it has support right down in here. I kind of expected to fully test that, but we're getting the rally. May go back up, fill that gap. And that could be it. That was all it took was a lower low than right here to complete the pattern. And it can go higher from here. What would the higher look like? 57.63. ABT. Back to the roadmap line would be what I would expect. Somewhere in that zone. TSM. Already drew that one. Crazy spike. It didn't quite touch the 1272 though, so could hold this breakout zone and push on up to 169. ON. If we're going up here. If we're going down here. And right now, looking like down here might be the line in the sand is right there. We get below that 70% likely we're going down here. ADI. Once, twice, 3, 4, 5, 6, 7, 8. That is a tough resistance right there. Bounce back down to the roadmap line. Holding the roadmap line pretty well. We can break through that resistance. This one's probably winding up for a big upside potential. I mean, we're talking a big move. Could be looking for something up here in the 250 to 300 zone. BitX, there's your leverage Bitcoin down today, of course. A little bit, turn it around. This could be a buy the dip opportunity. BTFD. Watch out. I mean, if Bitcoin keeps rallying, this is 2x right there without even, you can just buy shares and have 2x leverage on Bitcoin. You do pay a high fee for that, but let's face it, this is not what you're going to do for long-term exposure to Bitcoin, all right? Don't trade that if you're looking for long-term exposure. If you're looking for long-term exposure, go buy Bitcoin on exchange and lock it away in a wallet. If you're just trying to day trade it, this may not be for you either. TXN, Probably coming back down to the roadmap line. There are leveraged places to go play Bitcoin, and that's not the way I play. So, PD, looks like the target is down here. Going down in a blaze of glory. That low, that high. Oh, look at that. Confluence. Love it. Love it. Somewhere down there around 1750. BTFX. Valkyries. Now, Valkyrie announced that they're going to do away with the fee. They've been running behind on their assets under management accumulation. We look at BitFX versus IBIT. IBIT's, collected $16 billion on the way to roughly $120 billion. Think about it. BlackRock has $12 trillion under management. They're recommending, or that they keep parenting 1% exposure to Bitcoin. 1% exposure of $12 trillion puts us at $120 billion. That takes Bitcoin out of the pool. That effect, you can't just suck that out in one day either. It takes a while for that Bitcoin to move around and for that money to adjust. You don't just move $120 billion today and tomorrow, unless you're Uncle Sam, I guess. And you can just print, Jerome Powell can just go, there's 120 billion, 120 billion for you, 120 billion for you. But as far as moving retirement or money around and exposure, it's going to take a little while. This could take the next year and a half, 2 years for this to slowly creep up to that 1%. Right now we're in a quick little initial phase. We may slow down and get some more movement as we go along. So not all these Bitcoin spot ETFs are the same. IBIT quickly becoming the largest, GBTC seeing huge outflows. And one of the reasons that they're saying that Bitcoin was pulling back last night was because GBTC moved a chunk of Bitcoin worth roughly $400 million, which, do the math, that's not even that much Bitcoin, really. Grab the calculator and pull it over. 400 millions divided by, it was 72 yesterday. What is it, to 69 today? Let's just go on 70. It's only 5,700 Bitcoins. I mean, not even that much. I mean, not in the grand scheme when you're talking 21 million available. I mean, sure, it's $400 million is a big chunk, but it's not that big a chunk. Not for Bitcoin. They moved it to a hot wallet on Coinbase, ready to trade. They're getting liquidations. Why? Because stupidly, they're charging 1.5%. They take that fee out daily. The longer you hold your GBTC, the more of this you pay them. It's not 1.5% a day. It's 1.5 divided by 365. That's what it is per day. But you pay them per day to hold it. Look at that. Z crossing 52. Go look at that in a second. So compare that to IBIT, which is charging no fee, at least till July. Well, 0.12. BitFX here announced no fee until next year sometime. They were at 1.85, but they just announced they're going to do away with that till late next year. ARC-B, another one. Come on, finish loading. There we go. Look at their expenses. No expense ratio at all. Their AUM. This is ARC. This is Kathy Woods. Bitcoin. They've accumulated almost $3 billion of Bitcoin. And we look at GBTC and how much they've still got under management. They keep dropping. Right now, 28 billion. So BlackRock about to catch them. We're seeing net inflows to these spot ETFs, even despite the liquidations in GBTC. Now, GBTC GBTC is at all-time highs and probably going to push on up to 72. People that have been in this for since the prior highs over here, they're liquidating. They're getting the fudge out. Got my money back. Getting out. So it's an interesting dynamic playing out through the crypto market. We're seeing miners get hit. I figured miners would get hit into the halving. I mean, it's all part of my expectation that I expected. Bitcoin's not pulling back like I thought it would, but we have some other dynamics playing out. But miners are. So miners are doing the exact thing I thought would happen. All right. And Z. Look at that. Look at that. Sometimes I get lucky. Looking for it to come on down into the roadmap line. If not, make this move on down here. If we get down in here, it sets up what I call a measured bounce. Has large upside potential from that support zone right around 41 to 45. If we can get in there, we could be talking much, much larger upside. How much larger? I'm watching this one like a hawk because we could go from 40 up to like a double 89, possibly 109. I mean, that'd be a pretty sweet trade. Now, how long? Time. Lots of time. So SMCI getting murderized probably. And not even doing anything. Down 35, nothing. Just parked up there. When we get a real move, let me know. The fund starts below 850. Probably going to come way on down. Yeah, but look at the move right there. And not that one, this one. That's what's going to happen. Probably not all the way back down to the bottom, but we'll find a support in here. It's gonna retrace. These things do every time. All right. So what do I expect today? Well, looks like so far that more bearish scenario is playing out. Possibly. 1, 2. Now the other thing to watch. And we're right in there. We need to hold this spot that we're at right here. If we get below 5,100, we're probably coming on down to that lower low. All I can do is work on probabilities, and that low would be right in this zone, right in here. If we're gonna break down. So line in the sand, roughly right there. 5108. Get below there. Odds are we're gonna make a lower low than we made on Monday. And if we make the low on Friday, it's the lowest low of the week. That kicks in. Then 90% likely that we make a lower low on Monday or Tuesday of next week. So this is where things start getting interesting. Is that we could turn the market more bearish here. It's gonna be doing something more savage. So, all right, I covered Ethereum already on the futures. All the same path. Just do the math to get the difference. So, alrighty. Have a great day, everybody. Request shows are on Tuesday at 5 p.m. So if you got requests, come see me on Tuesday at 5 p.m. Otherwise, have a great day. I'll be back on Monday at 9:15 to cover what's moving. Have a great day, everybody. Remember, give me a like if anything I said was helpful, beneficial, gave you some sort of insight to the market. Let me know in the chat or in Discord what you found beneficial, and I'll see you